Welcome back, everyone. Today's video is going to be looking at how a number of the African uranium juniors compared to each other through the lens of some new information that Deep Yellow has kind of put on their website and not talked about, but put out there. So just quickly before we begin, disclosure to announce I am not long Deep Yellow, but I am long a number of stocks that are discussed in this video. I am, however, not short a single stock discussed in this video. That might not surprise you. Anyway, last thing, none of this ever investment advice. Do your own research. So many of the uranium miners out there, particularly most, not all, in Africa or with big projects, have some type of economic report that's been out. Deep Yellow doesn't really. So recently I saw deep in their presentation from like yesterday, I think it was, that what they're targeting for their economics of their project. So I decided to have a look and see what that would mean compared to the other projects. So Deep Yellow is targeting a 2 to 3 million pound per year mine on their main project. Now they stated that capex would be 115 to 130 US million per million pounds of production, meaning on the small end, 230 million, and on the large end and higher cost would be 390 million. But I'll get into the simulation or whatever later. They want to have a minimum initial rate of return of 20%, and they're targeting cash cost below $30. So let's have a look at what that means. So throwing around a few numbers and looking at what the results would be, for the simulation, I will use 115 million per 1 million pounds. So I will use a capex spend of 230 million. And for an initial rate of return, and you can work this out if you want for yourself, depending on what interest rate and what build time you want. For me, when I used my assumptions, they needed to make a minimum of $35 profit per pound to get a 20% IRR based on those numbers. Now, that's before sustaining capital. So this is if they said what they meant with cash costs. This is not all in sustaining costs. This is cash costs. So it's before the sustaining capital, royalties, and taxes. Now, in Namibia, I used assumptions from Bannerman, who talked about the government royalty, 3%, and tax rate, 37.5%. Although I will mention that in the assumption here, the case that I made, there was no, I assume that taxes were not applicable until the mine was paid back for this assumption. So I also looked at under 30 cash cost. So what I used, because I was feeling generous, is I used $25 and I used that as the all-in sustaining cost. I also assumed, as I said, 2 million pounds per year, 2-year build, which again, fairly generous. 210 is the royalty aspect of the uranium because that is, I use $70 in my assumption, and I used 60% debt with the interest rate on the debt being 7%. Again, you could fill in your own assumptions, make your own model if you'd like. Play around with the numbers. It's fun. Well, if we consider that fun, which sometimes I do. So yeah, and I also assumed no G&A, no transport costs, no sustaining costs, and no taxes until after payback. So basically, these assumptions are fairly optimistic. And with those assumptions, at $70 uranium, we got an IRR of 18.95% with a net present value at an 8% discount of 276.5 US million dollars. Meaning, realistically, they probably need north of, if those are the inputs that they're going to use, they probably need north of $75. And I say they probably need north of $75 because remember, in my assumption, I used $70 to get those numbers. Also, their grade is 320 parts per million, and we'll compare that with Langer-Heinrich, which is uh, almost 50% more, percent higher at 450 parts per million. And they hope to get their all-in sustaining cost to $29, which is also below 30, but my point is it's higher grade. Now, of course, maybe there's new technology, new mine, then maybe they could find a way to get it lower. So maybe DPL can do better. And also, I say 75 because, again, I was using the low end of the CapEx, and the chances of everything going right, well, it's mining. So don't get me wrong, I'm not saying that this is a problem because many of the mines in the region, especially in Namibia, and I'll get to that in a second, need 65, 70, $75, maybe 80 to really work. So with Deep Yellow, we're looking at a mine, they said 2 to 3 million pounds. That's still a small to medium-sized mine, with the close comparables being Boss Resources or GoviX's Madaouela. So there are a few other mines of that size, and look at the feasibility numbers to see what incentivizes those. And it's probably higher than most would expect, even when we're looking forward at the most recent numbers being from a few years ago. So I said I would compare them on a bit of a head-to-head basis, and I'm going to start with what is my least favorite metric in the world, enterprise value to pounds. Really dumb because some pounds have a very low grade and some pounds have a very high grade. So looking at this in isolation is really not my favorite way of looking at it. But here I took the lowest cutoff grade for the Namibian, for Bannerman, Deep Yellow, and Forces, and I used the attributable amount of pounds. So if you own 95% of the project, you get 95% of the pounds. And so here is a comparison. And as you can see, the lower grade in Namibia is valued lower than the higher grade in Niger. Now, the other thing I should mention is for Global Atomic and GoviX, I used the cutoff grade. For Global Atomic, it was 320 parts per million. And for GoviX, for Madaouela, it was 400. And for the other projects, it was a lower cutoff grade. But I did this between those two to show how actually on this metric, which again, I vehemently disagree with, they are basically the same price. Now, again, this is just the uranium. And if I were trying to compare Global Atomic specifically with some of the other deposits, you could lower the cutoff grade and get more pounds, which is why, part of why this is really not my favorite metric. Next, we have a different way, slightly different way of looking at it, where I'm comparing the enterprise value compared with the productive capacity in terms of million pounds. So now this isn't fair because, again, 3 of these companies have multiple projects, whereas the other 2 just have 1. Now, the ones with 1 are bigger, but again, just a different way of looking at it. And again, another not great metric is price to NAV. And here you could see and I did it a bit of a funny way, so please forgive that, but I just wanted to compare the price to NAV because the prices here is in enterprise value in Canadian dollars and NAV 8% discount US dollars. And so again, it's not the greatest comparison because for Deep Yellow, I used the $70 simulation that I made, which is not final or anything. And these are projects at different stages, so these numbers are old and probably wrong, which is why it's not great either. But anyway, Deep Yellow, $70, GoviX, $70, Bannerman, 75, Forces, 65, Global Atomic, 55. And this is part 2, why it's not a great metric, because, for example, if we were to kick Global Atomic up to $70, and I just know because I looked at this, the NAV would be higher obviously. Same with Forces, if you kicked it up. So again, I'm just showing a comparison between the existing African projects. Lastly, here are a number of metrics, just some discussed, some just thrown in here, just to kind of, again, look at the numbers and try and compare some very dissimilar projects. Another thing that Deep Yellow has been mentioning for a while is that they're looking to make an acquisition or two or three. And they said they're assessing 6 to 8 companies. And this is real challenging for me because I can't really think of 6 to 8 companies that I would think of as a fit for Deep Yellow to purchase. Uh, Maybe this is just me failing to imagine, but when I look at the existing companies and if I were to speculate at who they might be looking at, well, I would think Lotus is potentially a possibility. I would think that Mr. Borshoff would be familiar with that mine because it used to be part of Paladin. Maybe Toro, maybe Toro Energies Waluna. It could be cheap. Again, I don't know what Deep Yellow's thoughts on that were. Forces is another possibility. I don't know if they'd be able to buy that at what price, depending on that's very hush hush what's available there, what's going on there. So maybe that. GoVX, they have 3 projects, so there's a decent chance that one of them might be looked at. Now, whether they're willing to sell or if they want their own Paladin 2.0 type strategy of multi-asset developer, that's unclear. And if we're going for dark horse, trying to maybe swallow something bigger than them, if you will, there's the potential maybe a boss or fission. I don't know. Again, I would be surprised if they left Africa, which would kind of exclude a few of these options. But really, in Africa, they've mentioned that they want something that has a defined economic project. Not that many options. Now, that being said, when making purchases, you don't really need money. You have all the money you theoretically need in terms of issuing shares. Now, whether people will sell down the shares after, that's a different question. But the point is that I want to make is Deep Yellow does have very good access to money. They've been able to raise a whole lot of money when some other companies have not been. Now, this is probably part of their strategy, and they have some big backers, so that's, I guess, an asset for them. So they have 14.1 million Aussie dollars right now, or yesterday. So maybe bankrupt today. I don't know. I'm just kidding. Um, I'm kidding. Um, but the point is, they have access to money when many don't. So um, they they could probably get a whole lot more if they need to make some purchases or continue drilling. Now, when raising for a mine, that's a whole different scale of money, but also not currently relevant. Now, the very interesting and tactical part of the uranium thesis, or the different uranium theses, I guess you could go with, is that even just looking at Africa, you can have a whole bunch of different views and express it better or worse if you're right or wrong based on what your pick is. So, for example, if you wanted the most leverage, well, then you'd go with something that is the cheapest per pound now, maybe ish, that type of thing. Whereas as it goes up, you get more leverage to the upside. So for Deep Yellow, the thesis that best fits them is that uranium probably won't move for a few years because they do have easier, well, they claim easier access to money than others, and they aren't ready yet, so it'll take them a few years to get ready. But then the price would go to a very high number, and we can see that by looking at the assumptions, and they'd need more than 70, probably more than 75. So you need the price to get up there anyway. But what's best for them is if it takes a few years, but not too many. So, and in the meantime, you think that they're going to buy some cheap assets and get a better valuation on them and get easier access to money. And then that because they have multiple assets, they'll have more investor interest or access to cheaper money or something. If that's the thesis that you go with, then I suppose they are one of the options. But again, there are a number of potential answers to that thesis. So as I wind down, I just want to say that all of these companies, all of these projects need to be looked at on a case-by-case basis. There's no universal rule, well, that I've found at least, that answers all the questions. Each thing has different strengths, different weaknesses, grades, capex, and many have unique factors. Now, I tried in this video to show things fairly for all companies. And in doing so, I definitely was unfair to some companies on some metrics. So I don't hate your company, your stock. I'm just trying to show everything. That's all for today. Thanks everyone for watching. Remember, this is never investment advice. This is just me looking at a section of the uranium market that, in my view, gets far too little attention because, well, that's another story. Anyway, have a great day. Until next time.